Isn't it time you switched from those more outmoded Wall Street papers that don't help you with your investments and take too long to read?
We'll send you 2 weeks of Investor's Business Daily free, plus 2 new audio cassettes that could help you spot new business trends. Just phone 1-800-767-1900. That's 1-800-767-1900. Do it now.
Portion of Market Wrap is sponsored by the Travelers. You're better off under the umbrella.
Good afternoon, everybody. Welcome to the Thursday edition of Market Wrap. I'm Bill Griffith. Neil Cavuto continues on assignment this week. Wall Street is finishing the day sharply lower as investors consolidate their recent gains. Computerized sell programs, we are told, were a factor in today's action. Many analysts think the market will continue to consolidate as well in advance of President Bush's State of the Union address next week. Let's look at the unofficial closing numbers from Wall Street for this day with the Dow Industrials. You know what? What is it today? Thursday, we were down 30 points today, up 30 points yesterday, down 30 points on Tuesday. We're right where we were on the close of Monday's trading. Dow Transport's down 24 points at the 1383 level, and the utilities average down almost 2 points today, closing around the 213.26 level. On the New York Exchange, declines beat the advances by about a 9-7 margin. 473 issues were unchanged today. And the broader market averages were mixed. The Standard & Poor's 500 index down 3 1/3 points. The American Stock Exchange average up 0.98, though. And the NASDAQ over-the-counter composite index was up about 1.5, closing around the 622 level in today's trading. Dow component AT&T is reporting sharply lower quarterly earnings today. That drop was not unexpected, but nevertheless, John Teal tells us many telephone watchers were disappointed.
Earnings at AT&T were most visibly hurt by the company's previously announced $4.2 billion write-off. The charge was taken for restructuring and to pay severance expenses for 14,000 workers the company plans to terminate over the next 2 years. AT&T earned $522 million in 1991, down sharply from $3.1 billion in 1990.
If you take out the charges that we took, plus some one-time gains that we had during the year, our earnings per share came in at about $2.51 a share, which is up from last year's $2.42.
AT&T insists business held up reasonably well despite recession. Volume in its long-distance division was up 6%, and AT&T's market share stabilized after years of erosion. The financial services division also posted strong earnings, largely because of the continued popularity of the company's Universal Card.
We're not recession-proof, but certainly it indicates that you can still see strong long-distance growth even in what many say is a very, very bad economy.
But even so, some analysts are disappointed. The recession clearly hurt. So did AT&T's merger with computer maker NCR. But despite all of that, some analysts were anticipating better results.
I had hoped for something better. I had hoped that we'd begin to see more of the benefits of some of the cost consolidation, some of the cost cutting and the consolidation that should have taken place as a result of the merger. I guess I'm pretty happy with the way long distance looks. But on the equipment side of things, we've got to see some kind of improvement.
AT&T insists it'll do better next year. Some analysts are inclined to agree. The outlook for AT&T's computer division continues to be mixed. But at some point, all of AT&T's cost-cutting should show up on the bottom line. John Teal, CNBC FNN, New York.
During the day's trading, AT&T was down as over $1 a couple times, but it closed down 3/4 today at 39 5/8. And Baby Bell company NYNEX lost $1.24 a share for the fourth quarter, compared to a profit of 30 cents last year. That loss is primarily due to a $550 million restructuring charge. NYNEX closed down 3/4 today at 76 3/4. The auto industry continues to struggle. General Motors sales for the middle 10 days of January fell nearly 10%, while Ford sales dropped almost 9%. Chrysler only reports monthly, of course, but Ward's Automotive Reports estimates that the #3 automaker saw an 18% drop. Here's how the auto stocks did in today's trade. The General Motors Corporation lost half a dollar. Ford was down a quarter, while Chrysler lost a half to 12 7/8. In other economic news, 46,000 more Americans filed first-time claims for unemployment benefits for the week ending January 11th, but economists point out that the 4-week moving average, considered less subject to seasonal vagaries, actually fell for the latest reporting week. And on Capitol Hill, Congress spent the afternoon debating a new plan to extend jobless benefits for additional 13 weeks. That issue continues to be how to pay for the extra benefits. Bond prices generally lower on the day. Traders have a lot on their minds right now, including this weekend's G7 meeting, next week's State of the Union address, the Fed's Open Market Committee meeting the week after that, and, of course, a critical quarterly refunding of Treasury securities yet to be announced, which will find out how many 30-year bonds will be in there. Plus, yields are starting to back up here and there. Today's 5-year note auction produced an average yield of 6.28%, 4 basis points higher than the last 5-year auction. Demand was okay, but not as good as the demand for yesterday's 2-year note auction, and that was about as expected. Here's what the long bond did in the cash market late this afternoon, down over a point at 103 and 9/30 seconds. That pushes the yield up to 7.71 late this afternoon. And our next guest says that he has now taken a cautious approach to the stock market following December's big move. Joe Battipaglia, our guest, Director of Research with Gruntal & Company. You know, there's a lot of people out there now starting to get a little cautious, because investors' intelligence reporting this week that the bullish sentiment is the highest we've seen in a long time. 60% people are bulls. Call premiums are much higher right now. A lot of call buying, showing some optimism in the market. So we're starting to see some of those warning signs of the market, aren't we?
Well, you're also seeing froth in the IPO arena.
Right.
You're seeing it in the secondary and tertiary stocks. Basically, all boats are arise in this big tide, and that has to do with interest rates being so low.
Bob, those rates are starting to come up here. We just said the long bond now yielding over 7.7%. That might give a little competition, especially for those people who got into the stock market just for the yield on a short-term basis.
That's an interesting point, because what we really have is a balance sheet recession of magnitude, and the financial markets represent that. And the more the Fed eases, of course, the better the yield environment became, and the stock market took a lot of comfort from that and rose. But frankly, all of this was an effort to shore up the banking system and give everybody breathing space to recalibrate their balance sheets. But what's not happening is that consumers are not racing out to spend, and they're not anticipating a big windfall from tax change that they'll go out and spend. And corporations, instead of investing and spending for capital improvement, are actually doing the same thing, improving their balance sheet for what may be another difficult year in the economy. Right. In that scenario, then, the stock market will start to run into turbulence.
So it's something you and I were talking about a few weeks ago, I believe, that now the economy has to prove itself. The stock market's done its part, moving up in anticipation, but if the economy doesn't follow through, then we do have some trouble ahead for the stock market, no?
Precisely. You really must see two things start to happen. New job formations start to show up in the numbers, and incomes start to grow in a real fashion. When that happens, confidence will be restored. Now, you look at the auto numbers. Last year, those same numbers were during a war crisis, which should have made those the worst numbers forever. Yet 1 year later, in a peaceful environment, with interest rates half of what they were, the car numbers continue to fall. That's worrisome, and that's what stopped the market's advance in its tracks.
If you had to guess, Joe, looking ahead, I mean, all the things I was talking about in the bond market story, we've got the president's address next week, we've got the G7 meeting, we have the quarterly refunding coming up, the Fed's Open Market Committee. Anything there that could provide some sort of impetus for a continued rise in the market, or is it going to be business as usual, do you think?
Well, it's going to be the market's good friend, Mr. Greenspan, because if these numbers keep up, guess who's going to cut rates again? And guess who's going to give you the same knee-jerk reaction as they did every other time? That's the stock market. The president's plan is going to be somewhat watered down and convoluted. It will be something for everyone, but not enough for everyone. The G7, they're going in all different directions. Japan has its own internal problems to deal with. They just turned their nose up to the president's trade trip. The Germans are raising rates where we're dropping rates. There's very little coordination, so they're at a tenuous moment. So what I see happening is if these numbers keep coming out, corroborating a double dip, then the Fed will cut again, and that'll give the market a little breathing room. But no question about it, ultimately, you've got to have growth in the economy to support the valuation.
A lot to think about. Thanks, Joe. Have a good week.
You're welcome.
Joe Battipaglia, Director of Research with Gruntal & Company, joining us as he does each Thursday at this time. A couple of other stories out just off the ticker here. We've got service merchandise turning in fourth quarter earnings of $1.32 a share. compared to $1.26 last year at this time. That stock today was down an eighth at 10 5/8. And International Rectifier with second quarter earnings of 18 cents versus 57 cents last year, but that included some special items last year. That stock today was up a quarter point at 15 1/8. When Market Wrap returns here for Thursday, Delta Airlines chalks up a fourth quarter loss, and Nintendo hopes Major League Baseball will be its latest game. We'll have more on that in just a moment.
Valuable than most, this umbrella. Those who carry the Travelers for business insurance carry a 127-year tradition of excellence, upheld by 35,000 employees dedicated to customer service.